watching famous games on YouTube.
Hey, and welcome to the Short Vol Show, live from Cape Cod, Massachusetts, home of the Pilgrims. I came on, I just wanted to give you a little update. It's been a busy week for me, but I didn't want to neglect you. So here we are, and obviously, for those of us who are short volatility right now, it's a good day with the VIX down. We've had kind of a roller coaster ride for the last week. Let's take a look here at the charts real quick. So here's VXX. But let's just go to a VIX chart. Obviously, we had the little bit of a sell-off last week. It kind of was a little bit underwhelming as far as sell-offs go. I mean, it lasted, 1 or 2 days. Now, I wouldn't be surprised if we continued to grind lower to sideways here, but definitely we saw... Okay, so here's the sell-off for the last couple of days, the down move in the VIX. Let's put up a chart of the SPX for the last couple days. Let's go to maybe a 10-day chart. And just to review with you, this is kind of the story here. We had a couple days of sell-off here. Now, these are obviously kind of big moves, but this is nothing if not expected that this was going to happen. People talking about how the market was... A lot of people like to use the term frothy. I guess that's a new term. You know, it's funny. It's like last year and the year before, the big term was like parabolic. Everything's going parabolic. You notice I got a little sun lately. Everything's going parabolic. Now the term is frothy. Oh, the tech stocks have gotten a little frothy, they say. I never heard it. I mean, I know frothy makes me think of like when you're in a port and there's like this foam that's like next to your boat that's kind of like dirty foam. That's what it makes me think of. But like kind of like almost like bubble bath type bubbles, but it's like foamy. That or like, you know, when you there's too much of a head on a beer and you blow on the top of a beer and there's that head on the beer. That's what frothy reminds me of. But anyway, the sell-off was kind of underwhelming, but volatility coming into it was pretty big. I mean, the VIX really has been gunning higher lately, and there's been a huge disparity between the actual movement of the market and the VIX. Even those days, we had a couple days with down moves, but if you take the sum total of the volatility of the markets, the realized volatility of the S&P 500, which is what the VIX is based on, has been on average way lower than the VIX. So that's why it hasn't been surprising. Many people were kind of surprised by the fact that the VIX kept going up as the market went up. But in fact, that we were in a period where market goes up, VIX goes up, market goes down, VIX goes up. And, that can't go on forever. VIX is a mean reverting type instrument. So we know that it's got to revert at some point, and you can't just have it go up when the market goes up and up when the market goes down forever. And indeed, we really started to see it yesterday, kind of, and the day before, or I'm talking sessions, of course, last session and the session before, that being Monday, and then the Friday before. I'm sorry, Monday was a holiday, so Thursday, and then the Friday before, we saw, even with the market down a decent amount, we saw the VIX just didn't really have that much more energy reflected both in the spot and the futures to move higher. It's like we had this fear level that was raised ahead of this sort of event. And for me to understand it best is to just tell the story of how people saw the market keep rallying, and just were fearful that this rally can't continue and that it's actually going to crash because it's moved up so quickly that it's going to crash down so quickly. Now, just to look at some stocks that kind of reflect that move that people kind of consider to be too quick, let's take a look at Tesla, for example. And we really have to back it out to take a look at this. So, we saw the move way up in Tesla, which we can see right here. Same thing with NVIDIA. It was just this straight up, right? And you could tell that stocks just don't move straight up forever, right? And so people were very fearful when it moved up to that point. And that's why, that's like the best way in my mind to describe why the VIX was going up when the market was going up, just because we had this scenario where the market was moving so quickly and so many people were fearful. Add that to the fact that these stocks have had a remarkable move up in the last couple months, and people have money from their profits to buy puts to protect themselves from the downside. And when you put that all together, you can understand what scenario we have. And when I understand a scenario, that's when I feel comfortable putting risk on. It's when stuff starts happening and I just don't get it that I have to beware and get smaller and smaller and smaller. But in this situation, really felt like I understood the scenario, and thus I was able to short volatility in a bigger way, and feel confident doing that because I felt like I understood what was going on. And my screen seems to be going around in circles behind me here. Okay, so where does that leave us now? Well, the other component, which I haven't really talked about as much, is just the term structure. Now, the VIX term structure has been in this high contango for a while. So the whole time that this stuff is getting bid up and VXX and UVXY are kind of spiking upward, during that whole period, in the background, the term structure has been in sharp contango. So if we look at the last couple days, if you were short VXX and you just looked at VXX, you'd say, oh no, I'm losing money, it's going up, it's going down, whatnot. But in the background, we've had this very steep contango for a while now. And if we pull up VIX Central, we can see it illustrated in a couple ways here. One way is just looking at the term structure and seeing, now this is a new thing. They want you to disable ad blockers for VIX Central. Have you noticed that StockTwits also has so many more ads now? It's like the ads are just taking over everything. So we see here the 17% contango. Now this is a significant number, and it just use a rounded number. It means that stuff's decaying at about 4 points per month or a point per week. It's somewhere around there. And if we go to the contango tab and pull that up, once again, we can see that we are at a heightened level of contango that doesn't usually stay up here, but the whole time it stays up here, I am loving it because this means that over a longer period of time, stuff is decaying. We get, in this world we live in right now, I believe we get too focused a lot of times on just what is happening today in the trading world. How much money did I make today? How can I make a trade today that's going to make money? And we know from history and from experience that it's the longer term that's most important in life. Remember, I like to think that the people that are most successful are planning in life farther and farther out. Person who's living day to day, paycheck to paycheck, day to day, and you wake up, the person that wakes up and says, how much money do I have right at this moment? What can I do to party right now and spend that money? That's the opposite of what you want to be doing. The person that's looking out and planning all their actions today as part of a plan for where they're going to be 5 years from now is the person who's going to be most successful. So if I'm planning my day today as focused on maximizing whatever I want to accomplish in the next 5 years, then I'm going to be more successful. And thus, when we're looking at this, the VXX goes up and down, blah, 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 depending on what the VIX is doing at the moment. But as long as we're staying in this contango of this VXX decaying by $4 a month, then that's going to have serious implications for this stuff moving lower over time. And so it's almost like you don't even need to look at where VXX is on the chart. If you have a long-term position on, as long as we're in a steep contango, you're winning. We're winning here. And right now we're still at 17%, as you can see right next to me. So let's dig into the position that I have on for a second, just for as a way of showing an example position. And so here we go. So VXX, this is not a huge position. I just have on some puts in March. So I've got 14 of the March 21 puts, 4 of the March 20 puts, and 1 of the March 23. And what does that mean as far as Greeks? You know, we use the Greeks to analyze a position. And if we pull up the Greeks here, right with VXX around 27, I'm short 445 deltas. So that means each dollar VXX moves down, I make 445. Now, I put this position on with VXX around 25. We're $2 higher than that now. So I definitely went into the red over the last while. Remember, we got all the way up, I don't know, as high as what, 32 or 33 in VXX. So you can see here, P&L open, negative $776. P&L today, positive $490. So I need to get back through 25 before this starts being profitable. Other important things here, theta, $27 a day. Now that might not sound like a lot, but that is something that we seriously want to keep an eye on because yes, over time that does matter. Now, if we were to just do some quick kind of napkin math on this thing here, if we're moving down, if Contango is decaying this by $1 a week, that means if this went down $1, we'd make $445. However, theta costing us $27. So if we multiply 27 by 7, we could just round that up to 3 times 7 is 21. So decay is costing us $210 a week, but we're getting positive decay from Contango of about $445 a week. So we're still positive $200 a week if we take all these factors into account. And then, of course, you have to add in that the VIX is not necessarily going to stay here. Remember, the VIX average is around 20, right? We're at 27 right now. So the likelihood is over the next few months, this position is about 6 months out. Over the next 6 months, it seems more than likely that we will return to at least average volatility at some point, which is down from here. If we look at the VIX right now, it is around 2880. So that's kind of just a quick analysis of the position that I have on right now. And I really haven't adjusted it in a while. I'm just leaving it. So there you go on that particular thing. Hi in chat. I'm just looking at the chat here for the first time right now. What do you expect for the futures curve? Are we going to backwardation? Okay, so this is a great question, and let's go back and look at the futures curve again. And I'm going to tell you that I am not concerned at the moment about the shape of the curve. So if we drag this over again. So if we look at the curve here, and I get out of the way briefly so we can see it better, you can see that, yes, we're in steep contango. Now, remember, these 2 months are the only months that matter at all, right? This other stuff doesn't matter. Remember, VXX is based on an index of 30 days out volatility. You can pull it up, SP Vixter. It's easier if you have a... it's easier if you have a Bloomberg terminal, but I know most of us don't. But it's based on a 30 days out rolling number. So right now, if you look on this chart, we see SEP-OCC. We are about a little over 2/3 of the way through the month. So if we were to look on this curve, and if you look 2/3 of the way between September and October, that's kind of where we are in the curve, is an average where we've got a little less than 1/3 of, or around actually a quarter of September futures and 3/4 of OCC futures. And that's all that matters for our calculation. Yeah, but as you and everybody else surmises, looking out in time, it looks like it's backwardation over here, right? I would stipulate to you that as soon as this SEP future comes off and expires next week, that this curve is going to switch, and actually the October will move below November, and we will be once again in contango. I don't know how much by, but I believe that this is going to get pulled towards spot, and we will see this curve switch again so that the front month versus the second month are in contango. Now, we'll have to watch and see what happens there, but I'm not going to worry about not being in contango until we're not in contango, and I believe that will happen, that this curve will switch where the front month starts to get pulled kind of almost like by gravity down towards the spot price. So thank you for that that comment, because I did want to talk about that. And let's go down the list here. Hello, hello, Marcella. Nice to see you. Dave is Orange Man 2.0. Orange Man bad. Yeah, I look a little orange, I'm afraid, with this this coloration, but part of it is a little deceptive. It's the filters that are on here, so I can actually kind of fix this a little bit here. Watch this. Ready? Yeah, part of it is like just the color correction that I have on here. I can switch it to like contrast, saturation. Anyway, is that better? You can switch it around. Anyway, let's get back to the comments, and I'm going to let you go because I know everybody has time is valuable. Okay, so yeah, I mean, contango every month. You know, the contango is rated by month, so 15% is per month. So if you multiply that by 12, that's over 100% per year. It's very blur. I couldn't see anything from the chart. I apologize for that. SIBO future AUK. I'm not sure what that percentage you're referring to there is. Let's see. Why is it so blurry, the chart? It looks, you know, it's weird. It looks clear from here. Let me see if I can actually fix that. I know it's too late, but at least for next time, maybe we can get that fixed here. Let me put a filter on there and see if I can fix that. So, filter. All right, so if I do contrast, maybe that will help. Does that? No. Brightness? That's better. How about that? Let me get out of the way. And tell me, does that look better for you guys? Do you see it better? I'll try to do it better. I know it's hard to see like on a phone or something like that. Oh, I understand. Yes, thank you, Dasboff. What he's referring to is, or I'm not sure if it's he or she, but referring to the proportion of which future is held by VXX. And just to let you know, I am working with Vance Harwood, one of the experts in this industry, and we're working on a deep dive into the VXX prospectus. So we're going to go through the prospectus. We can go through it together, and we're going to talk about exactly the way VXX works once again, so that I want you to feel so comfortable in your understanding of VIX products that you can feel confident putting a trade on and knowing what's going on. Even if you're, because a lot of times you go into these chat rooms or something and people are feeding this misinformation, and I don't want people to be confused. One of the biggest misinformation things is people say, oh, it's a scam, VIX is up, like today. I guarantee there's somebody in the chat right now thinking, oh, VIX is down 274 and VXX is only down 117. What a scam. VXX should be down as much as the VIX is. But they don't understand. Well, it's a proportion of the futures. And if you actually do the math with how much each future is down, it makes sense. And you have to remember also that the futures and VXX, a lot of times VXX gets marked the price of VXX gets marked at 4 o'clock, and yet the futures and VXX keeps trading until 4:15. And different services will mark things differently, but there can be some little tracking error between the closing prices each day. It all works out in the wash, because if it's off by a little bit one day, it'll be adjusted back by that little bit the next day. So sometimes when you try to do the exact math, as far as like looking at, this future is down 1.77 and this one's down 1.2, why doesn't it add up? A lot of times that's due to tracking errors on the close, because these services get confused. They assume that since most stocks close at 4 o'clock, the VXX closes at 4 o'clock, when in fact VXX and VXX options close at 4:15. And in fact, the futures technically can close after 4:15. It's after 4:15 that they close. They do a closing rotation. It can take more than a minute at times, and things can adjust even after 4:15 slightly. So if you're trying to look at what's off by 2 cents or this and that, it's not being scammed. And I know most of the people that are watching this know that. So I don't make predictions moving forward, but and we don't know what's going to happen with volatility right now. We do know, though, however, if we stay in Contango, that the stuff is going to continue to decay. The VVIX is very high still. It's 121, and that means that we are still in a heightened alert right now. Now, vol has been way higher than realized for a while, and I wouldn't be surprised if we see vol move way lower at some point. And sometimes when it moves way higher than it quote-unquote should be, it just keeps moving higher for a long time, like we've seen. If we see it start to move lower, it could move way lower than you think is fair for it, and that could happen too. But I don't worry too much. I don't think, as a trader, I don't focus all that much on what's going to happen tomorrow in the market. Is NASDAQ going to go up tomorrow or not? I try not to focus on that, because we can't control that at all. Try to have a longer horizon and look at other things. And that's one of the fun things about trading these VIX products is with the Contango thing. If you know that if we're in Contango, then you're kind of adding edge to your position if you're short all the time. But you want to give yourself a long enough time horizon. If we're dealing with I'm going to buy a put spread that expires in 1 week in VXX, or in UVXY, we don't know what's going to happen in a week. Your guess is as good as mine. It could go up, it could go down, anything. But as we move farther and farther out in time, we can have more and more certainty that this stuff is decaying lower. They've moved stuff around. I think there might even be some SPX options that trade early in the morning now. The stuff moves around all the time, and I'm not necessarily up to date exactly on when some of this other stuff expires. But yeah, stuff, they're always trying to extend the hours, and at some point they're going to have stuff that's trading, 24 hours a day. Heaven forbid. I know the futures, it is kind of weird how we had 2 days off, and yet the futures were trading for 2 days when we had the days off and couldn't really trade the stocks. That was kind of weird. Anyway, so there you have it, folks. A little Contango update for you. I almost wanted us to stay in heightened volatility to keep that Contango upwards of 20%. I thought that was awesome to have it there, and I almost wanted us to continue selling off in the market so that we could keep the Contango up high. But 16% is still very respectable, and for a little while we've had the front month future lower than VIX spot, and when we had that setting up, coming into the weekend on Friday, we had the VIX front month future lower than spot. And we spent a lot of the month with the front month future 2 points lower. Let me say that again. We had a lot of the month where spot was way lower than the futures. It was 2 points lower than the futures, 3 points lower than the futures. Now that it's switched to actually the future lower than spot, it kind of felt like that might be a signal that we were going to move lower on stuff. And indeed, we did move lower. And we've seen today the VIX spot, kind of catching up to the futures to the downside. We're only inverted by 25 cents now between the front month future and the VIX. And the VIX has moved down more than the futures today. So look out for that. When we see a down move start to occur and you see, the front month future is racing down ahead of the VIX, that might be an indication for a continuation of the down move in VIX and VIX products. How do I usually short VXX, UVXY? Naked shorts. No, I never sell short VXX or UVXY. The reason I don't do that is because you open yourself up to unlimited risk if you're shorting the actual underlyings. If we get some big spike, you can end up losing all the money in your account plus some. So I never am naked short UVXY or VXX. The other reason why I'm not naked short these is that a lot of them are hard to borrow, so you can't even get the shares to short. If you don't understand what I'm saying right now, you can look up hard to borrow. I have a couple videos on that talking about borrowing shares to short. No, I typically will I will buy put spreads. I will sell call spreads, vertical call spreads, vertical put spreads. Right now, I do own some just straight puts. They're very far out in time, so they're not decaying very quickly. The other thing I will do occasionally, and rarely, I will sell naked calls, but not very often. And this channel, we have people that trade volatility to the long side, and that's a way of doing things that many people are good at and interested in. And I'm not somebody who's going to tell you, no, never be long volatility, never be long these products. What I do is I try to explain the risks involved and let you make what sort of decisions you would like. Yes, indeed, Lee, most small accounts are restricted from naked shorts. Indeed. And I would recommend being very careful shorting stuff naked. I would have a lot of excess in your account, or I would buy some maybe out of the money calls to hedge in the case of the worst case scenario, like, what happens if this goes up 200%? What happens if VXX goes from 27 tomorrow to 50 or 60? Where do you stand? You should be analyzing your risk. And I would suggest, if you're going to be naked short any of these things, that you buy some sort of protection for the extreme, because we know in the marketplace those things that could have the slightest chance of happening, that could never happen, that this thing goes up 100%. We know those things happen more, and it's going to happen to you as soon as you put the position on. So I don't do naked shorts. I don't recommend it. All right, I'm going to let you go. I appreciate your time. I appreciate you watching. Please consider becoming a member. It's like $2 or something. And what you're doing is you're supporting the channel. You're allowing me to bring you quality content. And, it takes time and effort to put videos together. And I appreciate everybody's support. I also, you can subscribe on Patreon to help support the channel. Generally, you have better access to me if you are supporting the channel. And what you're doing is you're supporting independent financial broadcasting, which is an important thing in these times. When you're watching CNBC is owned by big banks, and all they're going to do is pump the market. They're always going to say, they're just positive, go stocks, go market, pump, 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 pump. If you want something that's actually more realistic, then support independent media. I have Patreon where you could just support for, there's a couple levels on there. It's in the description. But also, you could just join a membership on YouTube. I think it says join under there somewhere, or it's under there somewhere. And it's just, when you post, you get a little avatar next to your name. What I do is, when I'm doing interviews, I'll release the interview in raw form to people on Patreon or members. And I'll also, I talk directly with a member sometimes. I'll put posts out. I'll do polls to see what people are interested in talking about, and you just have better access to me. But in the end, when you're supporting me on Patreon or becoming a member, what you're doing really is you're supporting the channel, and you're a patron of the arts essentially, and helping support the channel, which I much appreciate. I'd love to expand. I do have people who I can go to work the cameras, to do stuff, on the road, this sort of thing. But it all takes time and effort, and I have several side jobs that I do besides YouTube. If you get some idea from me, you learn a little thing that makes you a couple bucks, then, pay it forward. Thanks so much for watching, and we'll see you next time on the Short Vol Show Live. Thank you to current members and supporters.
You're watching Famous Game.